Good morning. Welcome to Stock Market Today, Thursday, December 24th, Christmas Eve, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get a lot of the content for this show. Daily stock ideas hit your inbox every trading day before the market opens. And just a special thank you to all of you. Happy holidays. Thank you for taking time out of your day to listen to what I have to say. And just a quick reminder, I will not be here next week. I'm taking the week off. There will not be a show. So let's dive right in. U.S. equities finished somewhat higher in quiet Wednesday's trading, with the Russell 2000 closing at another record high. Energy and financials were the best sectors. REITs and tech underperformed. Treasuries were weaker with the curve steepening. Dollar was weaker against the major crosses. Gold finished up 40 basis points. Crude oil settled up 2.3%. As we get to the desk this morning, it's a holiday shortened day. Markets in the U.S. closing at 1 o'clock. Those are equity markets. Futures are up 20 bips. After Asian markets were mostly higher overnight, though China did close lower. European markets are mostly higher with limited upside. Treasuries are stronger. The dollar is better against the yen. Little changed against the euro. Sterling is stronger. Excuse me. Gold is up 20 basis points, and crude oil is off 20 basis points to kick us off on the final trading day of the week that starts with a near-term consolidation within the context of a bigger uptrend for SPY and Qs. IWM, there's your record high at the bottom of the chart there. Russell 2000, the index itself, actually hit 2000. So Russell 2000 hits 2000 yesterday. IWM closed at 199.14. So no real change to the structure of the equity markets. The majors here in the U.S., SPY support 360, then 340. Breaking 320 would change the structure of the trend. For the Qs, 260 is important support, 300 in the near term. We've talked about it. 300 is the level that if we hold above it, we can say that this is not a false breakout. And that's something that you'd be looking for if you are bullish. You want to see that level hold. IWM 170, then 160. Above 340 for the SPY, your upside potential is to 413. And you want to continue to be bullish the market and look for the relative strength. Generally speaking, no change to our view. And as I said, there is no show next week. I'm taking the week off. So going to take some time to recharge. Hopefully you'll be able to do the same. But for now, our views remain largely in place. Let's hit our market in a minute. Mixed day. Santa Claus rally window opens today for those of you who pay attention to the seasonals. The Santa Claus rally window is often misunderstood. A lot of people think it's all of December. It is not. It's the final 5 trading days of the year, plus the first 2 trading days of the new year. And based on some work from my friend Ryan Dietrich over at LPL Financial, since 1950, the S&P has logged an average return of 1.33% in this 7-day window and has been positive 77.9% of the time. So for those of you who are interested in that stat, there it is. Breath is bullish, but has waned slightly this week. Cannabis ETF, YOLO, breaks a near-term consolidation. We'll look at that. And financials are oversold above support. And I think that that's kind of compelling. We're writing about it in our note. And interestingly, it's not just the banks. Cap markets and insurance also outperforming over the past half a year or so. Treasuries point to a higher open today. As I said earlier, trading does close at 1 p.m. for U.S. equity markets. Taking a look at the major indices from a power bar perspective, the Dow is back to even, 2-2, added 40 basis points yesterday. S&P 500 ekes out a slight gain, 7 bips, 123.59, bulls, bears there. NASDAQ down, your underperformer, 17-11, bulls to bears. Small caps outperform again, 820 to 123, bulls to bears on the small cap Russell 2000 ETF. Bonds down ticks and yields higher. Energy, your best group, up 2.2%, 3-2 bulls to bears within the XLE. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain strongly bullish. Let's take a look at our stocks of the day, sticking with our theme. Right? We're not going to break trend just because it's a holiday. I'm going to give you some ideas to avoid sources of funds. If you trade to the bearish side, maybe you look for some opportunities. With our screen today, I'm using the Russell 3000 as a starting universe and looking for names that are bearish or very bearish here at Chaikin Analytics. And then under our factors, I'm looking for technical factors that are bearish, stocks that are currently overbought with weak relative strength. The overbought is what sets it up for potential near-term opportunity if you do look at it. Some names that jump off the screen at me. What do we have here? Clorox is kind of an interesting name to look at. Cabot Oil and Gas bucking the recent strength within that group. Wendy's, Juniper Networks, Pacira, PCRX. You get the point. You can see the stocks here. There are 30 of them to choose from. If you own some, I think you have to ask yourself, why do I own this? If you don't, obviously these are names you want to avoid. And if you do trade to the bearish side, maybe there's some opportunities within the options market. You can look at some puts or put spreads, et cetera. Make it your own. But this is just a good starting point if you're looking for some bearish opportunities there. So that is our screen of the day featured here and in my note. Let's hit the sector tracker now, the movement of the last 5 days of trading. Fins at the top of the list. Tech and materials are the other two groups that are higher over the past 5 days of trading. Industrials, healthcare, discretionary, and staples are middle of the road. Comms, Utes, REITs, and energy at the bottom of the list. Energy, a little bit of a give back after some solid rallies that we have been talking about. So I don't know. It's a holiday week. Maybe we don't draw too much but from it. However, bigger picture trends that we've been talking about remain in place. We do our sector work every Tuesday in our note. We talk about some of the key developments here on the show as well. Hitting our industry in focus, transportation services. Been an outperformer over the past 6 months, leading the S&P by nearly 16%. Power bar ratio is very strong, 8-2 bulls to bears. Remember, that's a measure of future potential. Currently ranked number 13 of 21 subsectors, having moved up one slot over the past week. So some names there. ArcBest, ARCB has a very bullish rating. Hub Group, HUBG has a very bullish rating. And Americo, UHAL, has a bullish rating here at Chaikin Analytics for a fund, all our holdings in a fund. That's kind of an interesting development here, right? Near-term breakout and then checking back to that breakout level at around $70. Bigly oversold while outperforming. So we have a bullish fund outperforming oversold as it checks back to a breakout level. The trend is strong above the rising long-term trend line, 8-2 bulls to bears. You know, the ratio was an outperformer yesterday. So if you're looking for some potential long ideas as the economy is reopening in 2021, there are 8 bullish stocks currently that are holdings within XTN that might warrant some more attention. So obviously a key area of the market, a key area for the economy. So we want to see transports doing well. And right now it looks like the breakout is holding, maybe some signs of a stabilization. I like these setups where you get a breakout and then a bit of a consolidation that sets up an oversold condition for the fund or for a stock as potentially being interesting. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Diamondback Energy bullish rating up 8.5% on news of an acquisition. Dish Networks, there was a note out of Cowen yesterday that mentioned the company stock higher by 7.25%. FLIR was named a top pick at Goldman Sachs. That stock higher by 6.6%. Norwegian Cruise Lines, just some interest picking up, some commentary as vaccines make their way through the population, up 6% yesterday. And then Oxy, stronger with the energy space. I do have bullish exposure to Oxy via call options. That stock higher by 5.75% yesterday. On the loser side of the board, international flavors and foods down 3.8%. Nothing company specific to drive trading there. Etsy has had a monster run, gave some back yesterday, down 3.6%. Market Access down nearly 3%. No news on either of those two names. CTOS reported earnings, stock down 2.5% on the day. And Pulte Homes, PHM, lower with the new home sales number that was released yesterday. We did get a huge data dump in terms of economic data yesterday, obviously with the half day today and then the holiday tomorrow. So a lot of moving parts. I don't think it did much to change the prevailing view. It certainly didn't do much to change the prevailing trend in the market. So just kind of something to just be mindful of. Under the surface is where you potentially see a lot of the action playing out. The indexes themselves have been kind of, just kind of chopping sideways with an upside bias, but there's been obviously a lot of movement under the surface. That's why we always pay attention to the relative strength and try to find what's working and avoid what isn't. So breath, let's chat about breath today. It is Thursday. We do our breath work on Thursdays. So taking a look at market breadth here, percentage of stocks in the S&P 500 that are currently above their 200-day moving average, still solid at 89%, but it has ticked in a bit. This is very close to 5-year highs. Nothing really overly concerning in the metric other than saying, it got really overdone to the upside, but, still a sign of a healthy majority of stocks within the index in long-term uptrends. So that is compelling. On the more intermediate term, S&P 500 percentage of stocks above their 50-day moving average is ticked below 80. It's down to 77%. So again, a bit of a downtick, still a healthy majority. Right, we view anything over 60 as a healthy majority of stocks in an uptrend for that time frame. A little bit weaker, not shown here, but a little bit weaker on the percentage of stocks above their 20-day moving average. That's ticked down to about 52%. I highlighted in my note. What's interesting about the shorter term metrics, like the 50, the 200, the 50 and the 20, is that they did diverge. Didn't confirm the recent S&P high. So just something to be mindful of as we chop around here. It's not a sell signal. It's kind of a, hey, wake up. This is what's happening. Taking a look at the advanced decline line for the S&P 500, still solid, still holding the breakout level. So all in all, I would say the breadth picture is still constructive. It's still bullish for the market. Did see a little bit of a weakening here over the course of the past week. Actually, it's weakened over the past 2 weeks. And all right, fine. Markets has held up in the face of that. So one of the things that I actually find interesting that I report on in my note that I like to pay attention to is a percentage of stocks in the S&P that have a bullish or very bullish rating here at Chaikin Analytics. And it's still not really giving me an indication one way or the other. It's about 24.5% or so. It's above the 5-year average, but not at an extreme in any way, shape, or form. So really, the breadth picture largely remains the same from a bigger picture trend perspective. Taking a look now at some under the hood type themes and ideas. YOLO is the Advisor Shares Pure Cannabis ETF, and it's broken topside from a near-term consolidation. That near-term consolidation playing out above the 50 and 200-day moving averages, and is confirmed. The bullish trend is confirmed by momentum as the RSI has not become oversold since the March-April timeframe, and it's holding bullish ranges. So on an absolute basis, topside breakout. Same goes on a relative basis. Take a look at the bottom of the chart. Nice steady uptrend since October and making new relative highs against the S&P 500. We all know that cannabis was a big winner in the November elections. So when I see this consolidation breaking topside, I want to kind of call it out, especially when it plays out with the Chaikin Power Gauge ETF rating being very bullish for the fund. So some interesting dynamics, a little bit of a niche area of the market that I think is going to get a lot more attention, might warrant drilling down a little further, looking for potential ideas and opportunities within this theme. And then financials, taking a look at the XLF. XLF is consolidating above these June highs. Importantly, above the 50-day moving average, above the 200-day moving average, which is now beginning to turn higher. Fund has a bullish rating at Chaikin Analytics. And what's interesting to me, again, is we have not been oversold since the March lows. You actually had a little bit of a bullish divergence here at the ultimate low, and then we've been grinding higher. And now we have a shift in the RSI to bullish ranges. All the while, on a relative basis, the fund is potentially bottoming, actually starting to outperform a bit in the near term. And it's not just the banks, right? We've talked about the banks. We talked about the yield curve, rising rates, how that's good for the banks. But capital market stocks have been strong. The insurance stocks have been strong. So it's fairly broad across the sector. So something that I'm highlighting today in my note. I think there's potential opportunities here. That is going to wrap it up. Final show of the year. Thank you all for taking time out of your day to spend it with me. Take us for a test drive, chaikinanalytics.com/test drive. I hope you all have happy holidays and all the best in the new year. I will see you in 2021.